Hello, I'm Jerry Willis, and this is Your Bottom Line, the show that saves you money. Every weekend, we're here to help you save, protect, and build your money from your house to your jobs, your savings, and your debt. What you should be doing right now to survive in today's rough economy. Your Bottom Line starts right now. Okay, so let's start with your house and your job. So many of you out there struggling to pay your mortgage, and matters are only made worse by the dismal state of the jobs market. All 50 states reporting higher jobless rates than last year, with 4 states above 10%. So let's get to the solutions, for goodness sakes. Dani Babb is the author of Accidental Landlord. Sonia Aline is career editor with Black Enterprise. Greg McBride is a senior analyst with Bankrate. Welcome all. Okay, I'm tired of the bad news. I don't want to hear it anymore. I don't want to hear about jobless rates. I don't want to hear about what's going on with housing. I know there are opportunities out there in this marketplace for people no matter what you're doing. Greg, I want to start with you, but I'll give everybody a chance. You know, mortgage rates under 5%.
Flirting with record lows, great opportunity to refinance that mortgage. That can save you a couple $100s a month. That makes a big difference in this type of economy. The other thing is from an investment standpoint. You know, maybe everybody's taking a real hit on the 401k, but here's a good opportunity to diversify, better diversify. Maybe put money into different sectors of the market that you didn't previously have access to.
Well, wait a minute, Greg. I got to interrupt you there. Diversify into what, though?
Well, you know, last year was a bad year because 15 of 16 asset classes all fell in value. However, you're getting much better value now. If you've always wanted to have money in a particular area of the market, maybe you're underweighted internationally and you were reluctant to do so beforehand, you're getting much better value if you do it now. The key is you have to have a long-term perspective. This is not a way to make a quick buck.
So you're saying bring down those average investing costs by buying now. You're buying on the cheap. That's really good advice. Sonia, you know, we hear so much about the jobs market and how bad it is, but there are opportunities. There are companies hiring out there.
There are, and there are industries. We know that healthcare is hiring and the government is hiring. And I think when we think of government, you think of these traditional type of institution opportunities, but they're hiring in PR area, artists. I mean, there's a broad spectrum of opportunities there. If you go on to opm.org, you can see the listing for all the federal jobs, but then each division of the federal government also has its own listing of what's available.
We often call that usajobs.gov. I think it goes both ways, but those are the federal jobs out there if you're looking for one. It is a great website. They have more than 45,000 jobs open. Who knew, right? Yeah. Dani Babb, for goodness sakes, you know, foreclosures all over this country, right? But this actually spells opportunity for people who have the wherewithal to jump in and buy now.
Yeah, we've had trillions of dollars taken out of this market. So where is it? Take it out from underneath the mattress, stick it in investments or homes. Homes right now are at record lows. We have record low interest rates. We have huge amounts of inventory. I was helping someone get a condo in South Florida that was worth $700,000 3 years ago for $20,000 from the bank. It's
okay,
going to require about 50 grand.
You have to repeat that.
Fix-up costs.
$700,000 condo for $20,000.
Even if she has to put 50 grand in, it's a 90% savings. Buy where the boomers are moving, and you'll be very happy in 10 years. Awesome opportunity.
All right, but to do some of these things, Greg, you really need to have access to capital, to money. You need to be able to borrow, obviously. How do you do that in today's market?
Well, in this day and age, I mean, credit is still available despite all the stories we hear otherwise, but it takes good credit, proof of income. You have to have the pay stubs to show you can repay the loan, and either money for a down payment or equity in an existing asset, like if you're trying to refinance a mortgage. Those are really the 3 rules of the road. If you have those 3 things, you're in business. If you're missing any one of those 3 elements, makes it there's some tough hurdles you have to clear in order to get credit.
Sonia, I think for so many people out there, it's all about whether they can survive this spate of joblessness and the down economy to get through to the recovery. What do you do right now if you're jobless to save yourself money, to make sure you can make it through the 3 to 4 to 6 months? Who knows how long you're going to be without a job?
Well, the thing is you have to keep yourself open to any opportunity. You have to be working, and that's going to be really important. I spoke with somebody the other day who was an executive and, you know, thought less of taking a job that didn't really meet her skill set. We're in survival mode, and so you want to be working. You have to, if there are opportunities there, it may not be the ideal situation for you, but the goal is to take it so that you can maintain your cash flow.
All right, Dani, you know, the president came out with a big plan last week to help people get through the housing crisis. Is this going to make a big difference? And do you think people should try to take advantage of it?
They should take advantage of it if they're underwater in their mortgage, and even if they're on time. That's the really big difference here. If you're on time with your mortgage, you can still either get a refinance or a modification through your own, you still have to go through your lender, but this is the time to pounce on those opportunities, and the government is also helping small business entrepreneurs, which is a huge opportunity right now in the marketplace.
Is this a solution, though, to the housing crisis?
It's not going to solve the problem, no. I mean, it's not going to make the foreclosure issue go away. The plan does a lot of good things. It doesn't go far enough in some areas. In particular, people that are underwater on their homes in states like Nevada, Arizona, California, and Florida, they're well above that 105% ceiling of loan to value. They're not going to be eligible to refinance. And these are, in many cases, people that made their payments on time. They made a down payment. They were a victim of nothing other than bad timing, yet they can't take advantage of today's low mortgage rates.
You know what I'm starting to tell some people who I know are in deep trouble? At some point, sometimes, you just have to walk away. Is that right, Dani?
Unfortunately, that is the case. If you are at the 105 LTV mark and you are going to take 15 or 20 years to recover, right now, a good friend of mine...
105 loan to value.
Loan to value, yeah. And, a good friend of mine told me credit is worthless today because you can't get it anyway. So who cares what your credit score is? Survive for the next 7 years without it. And in some cases, if that's in the best interest of your family, you may have to.
All right, guys, stay put because we're going to talk to you a little bit more. For more on issue number one, America's economy, anytime, and the rest of the day's news as it affects your bottom line. Just log on to CNNMoney.com. Greg, Dani, Sonia, we're coming back to you, and we want everybody to hang tight with us. We've got the answers you need to get your family out of debt right now. These are stressful times, and having a ton of debt to deal with, well, it doesn't make your life any easier. So let's find a way out. Still with us, Dani Babb, Sonia Ellen, and Greg McBride. Guys, welcome back. I want to talk about managing your money. Greg, let's start with you. People have so much debt, and despite the fact that interest rates are low, they're paying 22% on credit card debt. What is the essential step right now?
Well, there are the haves and the have-nots, and when it comes to credit cards, if you have good credit, a strong credit profile, and low balances, you've got a lot of bargaining power. But if you have a lot of debt, if you're struggling to make those minimum payments every month, you don't have a whole lot of bargaining power. So you're going to have to make some tough decisions with regard to other expenses in order to free up that room to pay down that debt a little bit quicker.
And of course, the credit card operators are making it harder than ever to pay it down because they're raising their rates, lowering the debt limit, so it really hurts your credit score. I want to go to you, Sonia, because it's different if you're jobless. It's different if you're having difficulty finding a new job when you've got that debt. And I hear some people say, forget the credit card debt. Just call them up and see if you can work out a plan. Make sure you pay your mortgage first. What is the essential debt to pay off if you're jobless?
What's happening is everybody's panicked, and they haven't really assessed what their personal financial situation is. So that's really the first point. You really have to look at what your situation is and what you can afford, what you can really eliminate. And that's where we're finding people have a lot of problems eliminating the essentials. And what I've been telling people, even if they are out of work, when you talk about broadening opportunity, the recovery area, which is bill collections, that's a place that's actually expanding. So when they're calling you, I would ask if they're hiring. I mean,
wow, that's a great idea.
You have to step outside of your comfort zone and way outside of what you're used to thinking and try to figure out how to make ends meet.
So ask the bill collector if they're hiring.
They're growing.
They are growing. That's an excellent idea. Dani, you come at this from a different vantage point. You're thinking real estate. You're thinking managing that money. I'm thinking, what am I going to do with my mortgage? What's your best advice?
My best advice is, first of all, always pay the thing you want to keep first. So you want to keep your home. Also, that's a tax deduction. That's tax write-off. So you'll want to pay that above and beyond anything else. Revolving debt's the worst thing that you can have, right? So revolving debt's the thing that one, you want to pay off last, but two, you don't want to accumulate more of. So stop, rip up the credit cards, don't use them anymore. Start to pay off the balances that you do have. Now, one interesting thing I'm finding is a lot of people that I've been working with are able to successfully negotiate with their credit card companies, even if they've been a little late or they have high balances or they have a slightly less desirable credit score, to get those bills so that they can pay them, because the banks don't want to lose any more money.
Right. We're seeing a lot of that, and even ads now from some of these credit card issuers saying, hey, we'll work with you. I want to get you guys to answer an email from one of our viewers. Tom asked, my company just announced they are suspending their 401k contribution because of this current economic situation. Should I stop contributing to my 401k? I've been in it for 2 years, and I have $9,000 in it, which is great. But, boy, I think stopping contributing, what a mistake if he's employed, right? You
still want to maintain the habit of retirement savings. Now, without that employer match, the 401k may not be the best option. I would recommend Tom look into a Roth IRA. That might be a better option. They're subject to an income limit, but the benefit there is you can take money out tax-free in retirement. and then also pay off that high interest rate credit card debt.
And you may have more investing opportunities, too, in a Roth. The world's your oyster. In a company plan, you only have so many
only
options,
the options
right?
they give you, yes.
All right, so, well, let's say, we're like Tom, we're in a situation where we have a job, we're having a hard time savings. Where do you find that extra room to save month to month? Because I get emails from people who say, well, Jerry, it's all well and good to tell people to save, but how do you do it in this economy?
Yeah, that's the million-dollar question, right? First of all, we have to cut out all of the non-essentials, figure out ways. I've worked with people who work with their water company, their electric company, to try and get their allocation increased, which dropped their overall utility bills. You have to get a little bit creative, start carpooling, start cutting back on things that you don't need. And also remember that if you're contributing to your 401k and you're earning maybe 3%, you're lucky you didn't lose money, but you're paying 20% on your credit card, you might want to stop the contribution and put the money towards the credit card.
You can make an apples-to-apples comparison like that. How much am I paying for my debt? How much am I earning in my savings? Yes. Sonia, when you think about managing that money and you think about getting rid of those credit cards and finding the savings, where do you look?
I agree with Dani. You have to cut out the non-essentials. And so it can be all the things that we're a very service-based society. And so a lot of the things that you would actually farm out, you may have to start taking them inside. Simple things like just taking your lunch to work can cut down tremendously in what you're paying for lunch at the end of the week if you do the averages. But again, you have to make the personal assessment of where you are, what you have, and what you can afford.
Greg, we're talking about where to find savings. Of course, a lot of people would find a lot of savings if they could just lock in these mortgage rates, right? But what so many people don't understand, and what I find myself explaining over and over again, if you don't have a job, you're not getting the new mortgage, right?
Exactly. Now, that's where the new housing plan that's come out has what the mortgage modification plan. And so somebody without a job, they may not be a candidate for refinancing without that steady paycheck, but they could be a candidate for a mortgage modification, especially if they're out of work or if they've accepted a job that's paying a lot less than the last job they had. That's a financial hardship that may necessitate modifying that mortgage.
All right. Well, guys, great job. Great information. We really appreciate your help. Take the fear out of your job search. We'll empower you with the tools you need to make a smart career move.